Today we will be discussing Open stock and why it is up so much and where it could be heading this week. Let's get into the video. Hi everyone, my name is Zach and welcome back to Finance Bro. Before we get into the video, I'd like to ask you guys to please comment how many shares of Open stock you have, and then also consider leaving a like and subscribe, as it really helps with the growth of the channel. And if you guys want to see what stocks we are trading and why, and you also want to see our public stock portfolio and want a free stock that could be worth up to $70, go ahead and get signed up with Public in the first link in the description. When you deposit $1, you're going to be able to get that free stock worth up to $70. So go ahead and follow us on there at It's Finance Bro. With all that out of the way, let's get straight into our stock for today, which is going to be Open stock. So as you can see here, Open stock had a very good day today. They were up 25% off after their super good earnings call. We're going to be going over the earnings call that they just had. We're going to be going over a fundamental analysis of the stock in general on Yahoo Finance, and we're going to be ending with a little bit of technical analysis. So if you guys want to see any of that, go ahead and stick around to the end of the video. But now on to StockTwits. We use this website in order to see which stocks are trending, and you can see Open Door, and this is not sponsored by the way, we are sponsored by Public though, first link in the description, but Open Door is trending number 6 on StockTwits. So whenever a stock is trending on here, you can pretty much guarantee that there's going to be at least a lot of eyeballs, a lot of volume with the stock, because something is most likely going on with it. So yeah, they're trending number 6. That is most likely because their Q2 earnings call that happened yesterday went extremely well. You can see here that they beat earnings per share by 100%. There was an expected -20 EPS and there was a reported 0. And then in terms of revenue, there was an expected 1.09 billion, but there was actually 1.19 billion in revenue actually secured, a surprise of 8%. So the earnings call went extremely well for Open Door. Anyways, let's take a bit of a deeper dive into how this earnings call went on seekingalpha.com. We can see our Open Door technology stock surges 14% after Q3 guidance. Now this was yesterday that it surged 14%, but after their Q3 guidance exceeded the consensus, that is why Open was up so much today. But yeah, let's talk about this. So after the digital residential real estate platform issued Q3 guidance exceeding consensus estimates and swung positive adjusted EBITDA in Q2. Based on our current momentum, we are operating today at a second half revenue run rate that is on track to meet the 2023 target we provided at the time of our December listing, said co-founder and CEO Eric Wu. So they basically said, hey, we're on target. A lot of people didn't think they were, so that's probably why why the stock is up so much yesterday as well as today. But you can also see here that Q3 revenue of between 1.8 and 1.9 is higher than the consensus of 1.62 billion, and adjusted EBITDA of 15 to 25 million, better than the Visible Alpha consensus of loss of 17.7. So obviously they've killed it in this earnings call. Q2 gross margin was 13.4% versus 13% in Q1. Contribution margin of 10% versus 10.2 in the previous quarter. So overall, they are beating on everything, every consensus that was there, and that's why they're up so much today. Adjusted EBITDA of 26 million versus the Visible Alpha of a loss of 0.3 compares with the loss of 2.14 in Q1. So they absolutely crushed the adjusted EBITDA. They purchased 8,400 homes, up 134% from Q1. So they are obviously doing very well in the digital real estate realm. Increased inventory balance to 2.7 billion, up 224% quarter over quarter. They're really gearing up to kind of take their business to the next level with all of these moves that they are doing now. Anyways, let's take a bit of a fundamental look into Open Door. So you can see that Open Door is only a $10.9 billion market cap, even though they're doing about $1 billion in revenue each quarter, or they did this last quarter, but they did $1 billion in revenue, and the market cap is only 11 billion. So they're not pricing in, too much of their growth in the future, which this is definitely going to be a growth stock considering how successful they have been, especially in this last earnings call. But yeah, we can see here that Yahoo Finance doesn't quite like this stock, but if you can take a look at the financials, we are on an upward trend in the past in terms of the past 3 quarters. This isn't even showing Q2 yet, but we definitely we did over $1 billion in Q2, so this will be a very, very good trend in the past 3 quarters. Yahoo Finance does have this as between a buy and a strong buy, and price targets have this stock anywhere from $17, which is a little bit less than what it is now, and as high as $42. So the average is about $32, which would be almost 100% from its current levels, and these are all supposed to be within the next year. So in the next year, a lot of analysts think that this can go up over 100%. And I don't know if you saw that because my face might have been in the way, but basically, if you take a look here, you take a look at everything we just looked at. But yeah, recommendation rating has a buy and price targets right there. So now you can see, we can go to financials and take a look at their balance sheet. That their balance sheet is pretty solid. You can see here that they have current assets of about $3 billion and current liabilities of only $600 million. Total debt, they do have a good amount of debt, but that's mostly all in real estate, so that's totally understandable, but they do have a lot of current assets right now to make for a very strong balance sheet. Okay, and now we can go over a bit of technical analysis. So zooming out to their last earnings call, they were also sitting at about 13, and they had like an okay earnings call, but ever since then we have been kind of consolidating. Compared to back when this stock used to be trading at almost $40, we've done a bit of consolidating, and this kind of earnings call kind of makes me think that we are going to start that bullish trend back up. As you can see here, over the past couple of weeks, we have been making some higher highs ever since bottoming out at about $13, and obviously this earnings call just sent them up about 24% today. But overall, we did just break a resistance level at the 1670 area, and we have another resistance level that we also just broke at $18. If we can open tomorrow above $18, then this thing will be on a bullish trend, in my opinion. We do have a bit of an another resistance at 1850, but I think we blow past that, and I think we try to test that $20 resistance. I still think in the next week there's still another 20% of gains left. Now, it's not financial advice, that's just kind of what I'm seeing. I think possibly we take a bit of a step back tomorrow, maybe a few percent down, but then for the rest, well, I guess tomorrow is Friday. But going into next week, I think there's still at least 20% gains left to be had, because this earnings call absolutely crushed on every level there was, and I think we're going to start a bullish trend back up into that $20, $22 area. But yeah, that's kind of what I'm thinking about this stock right now. What are you guys thinking about this stock? Let me know in the comment section down below. If you guys have any questions about it, go ahead and leave those too. And yeah, it kind of just really helps with the YouTube algorithm and our growth of our channel in general. We're really trying to hit 10K YouTube subscribers today, so if you guys could please leave a like on the video and subscribe to the channel, that'd be super awesome. Thank you guys so much for everything you've done for us. We're so grateful. My name is Zach, and I hope to see you in the next video.